welcome. You're watching Countdown right here on Bloomberg Quint Live. The markets are holding steady ground. For the Nifty, we are strong above 11,100. The banks are doing okay post the monetary policy. Let's take a look at the headlines for now. The Monetary Policy Committee cuts repo rate by 25 basis points, citing room provided by the headline inflation leaves room for another cut. Indian bonds trade largely flat after an initial drop in yields post the policy announcement. The markets shrug off the surprise rate cut and the Nifty hovers around 11,100. And Jaguar Land Rover may continue to weigh on parent Tata Motors numbers in the third quarter. Sales in India were also subdued. Good afternoon, Neeraj. The markets seem to be holding pretty steady post the policy. Yeah,
about 0.5% up right now. We were talking around the policy with Chakri and a few others that with the commentary looking as dovish as it seemed to look, is there a case for the Nifty Bank to move higher? And maybe it is the Nifty Bank which is leading the Nifty higher as well. We'll get the heat map up in a moments from now. I'll just bring up the market breadth as well in the session. 3 days on a trot now. We've had negative market breadth in today's session. There is a bit of a change here. So interesting to see the volumes too, because we are now 2:1 in favor of the advances. We'll get to the volumes in a bit. Firstly, what's moving the index? Sun Pharma up about 5%. Z, third day on a trot, up about 3%. This has to be the index stock of the week, to be honest. It's just had a very, very good week. Eicher Motors, Bajaj Auto, Tata Motors doing okay. Interestingly, the FADA report, which is the Automobile Dealers Association report, seemed to suggest that inventory levels have risen. But auto stocks are doing rather well for themselves. Yes Bank about a couple of percentage points higher. Ultratech about a percent and a half higher. Not a bad day for these names. Reliance is laying low today. HDFC is lying low today. So a couple of those heavyweights looking soft. Tech Mahindra, after that mammoth uptick yesterday, down about 1%. So some bit of sedate, some bit of profit booking, and metal stocks also grind lower a bit today after a good start. So a bit of a turnaround for the large cap space. But the mid caps presumably a lot better than yesterday or the last 3 days, because the market breadth is looking positive.
Yeah, so this time around you're actually seeing some support coming in from the broader market perspective as well. So starting off with the mid-cap index and what's doing well in today's session. So you've got a Muthoot Finance, Manappuram Finance, both Manappuram on numbers, 8% higher, so not looking bad at all. Bakrangi is up about 7%. You've got IDFC First Bank that also reported its numbers over the yesterday. So the stock is up in the session about 6.5%. Group Finance second day on a trot is up 5.5%. TVS Motors, and like Neeraj highlighted, it's the automobile names and even two-wheelers for that matter. Hero MotoCorp, Bajaj Auto, TVS Motor, 5% higher on that counter. Avanti Fees, RVC up about 5%. What's losing out? Reliance Infrastructure, again a heavy knock to both Reliance Infrastructure and Reliance Power, which are trading with cuts of more than 20%. Reliance Capital too is down about 20-odd%. HEG is something to watch out for. Disappointing numbers and stocks down 4%. Adani Power also in light with what the power stocks are doing today is looking subdued. Diwan Housing Finance, that's down about 2.5%. Should see what RNAM does, while the entire ADA group stocks are trading with heavy cuts. Reliance Nippon Asset Management, that's one stock that actually managed to, weather the storm that most of these stocks have seen in the last few trading sessions, and should see what that's doing right now. 2.8% lower. So obviously not taking after what the rest of the ADAX stocks are doing, but managing to just about stay afloat in the session and over the last few trading sessions. So that's RNAM for you. Small cap stocks, just a quick run through and a quick brief of what's happening there and where the movers come from. So a CG Power ahead of numbers, lost 20%. Today trades with gains of 10%. Shrey Infra Finance up 10%. Rain Industry, Shankara Building Products, constant losers. Today see some reversal in trade. And Bajaj Electricals is up about 5%. We've got Arcom down 5%. Welspun Corp down 4%. Godfrey Phillips, PVR, Welspun India, some of the bigger losers in the small cap space. But what's been happening in the futures and options space? Agam Vakil joins in for that.
Well, we have seen more entries in open interest towards futures, considering the Nifty is up by around 0.3%. The gains on the Sensex are a lot more, but the Nifty Banking Index, that's where we're seeing significant traction, considering your 9.5% increase in open interest. The India Volatility Index has come off further, and it's now down 2.6%, inching towards the mark of 15 now. In terms of changes, as one might expect, we've seen writing around the 11,000 put, and some more writing around the higher levels such as the 11,200, 11,300 calls. But in today's day of trade, among the stocks which are actually buzzing in trade, we do have a lot of traction in Manappuram Finance, which is actually seeing significant longs building in, and that is as is the case for Muthoot Finance as well. And here too, we are seeing a significant increase in open interest towards fresh longs. We also have a lot of traction in IGL, that's Indraprastha Gas. Longs coming through on the back of 29% increase in open interest. And we also have a lot of traction in several other stocks such as Ujjivan Financial. This time, however, is towards fresh selling, even as the stock takes a knock of 4% with a 23% increase in open interest. More gainers as against losers. It's turning out to be a reasonably good day of trade for those who are long in the markets.
All right, Agam, thanks very much for that. That's a quick F&O wrap out for you. Rather a positive trading day from all quarters. Just want to look at some big movers in the session, and Sun Pharma continues to gain from strength to strength, about 438 now. Z, an interesting move. Over the last 7 days, the stock's been up almost 6 odd percent, reducing the losses that we've seen over the last 1 month. The stock back at 400. Let's see whether or not it can sustain these levels. Ahead of numbers, though, Tata Motors is looking fairly well placed. Now, remember, there are concerns of what JLR could be doing in terms of, their EBITDA margins, because that is one important number that you need to watch out for. Because from a region like China, which is a high margin segment for them, this time around expectations are that it may not be that great. And even India ose continue to remain a bit subdued. So ahead of the numbers, at least, there is some fair bit of excitement on the counter. Let's see what they come out with, through the course of the rest of the day. 184 on Tata Motors. Bajaj Auto, 2.8% higher. You've got Yes Bank, which is moving closer to 180 once again. That's not bad. And Maruti Suzuki, that's come back to levels of about 7,200 odd that we've been seeing. Dr. Reddy's is up. HPCL, TCS are some of the other bigger movers in the session. I remember this conversation that we were having, and we'll get in a market guest in moments from now to talk about all of this as well. But Manappuram and Muthoot, amongst other reasons why they are up and about, is because the Reserve Bank of India has, for the purpose of risk weights, NBFC is classified into 3 categories. Loan companies, the risk weight would be now based on credit rating. There's no change in HFCs, AFCs, etc. But for loan companies, the risk weights have been based on credit ratings. As a result of that, for companies like Manappuram and Muthoot, at least analysis seems to suggest that the risk weights may reduce from about 100% to 30%. Now, this would be positive from a perspective of the amount of loans that they can disburse, and which is why Manappuram Finance and Muthoot Finance are doing rather well for themselves in the session today. Should also pull up Shriram City Union Finance as well as Muthoot Capital and see if those two are rising in trade today as well. Not so much for Shriram City Union Finance. Muthoot Capital should come up. That's the other one in the two-wheeler loan category, and that stock too has done well. So there are these 3 or 4 names that might stand out because the long-term credit rating of some of the loan NBFCs, the likes of Manappuram and Muthoot, which is AA or AA minus or thereabouts, maybe they benefit as a result of this. We should actually try and get one of these capital, Muthoot Finance or Manappuram Finance. Okay, I'm told we do have Muthoot Finance on the phone line. If I'm not wrong, Mr. George Alexander Muthoot joins us right now on the show. Thanks so much for joining in, Mr. Muthoot. Tell us, do you sense that there is a change that will benefit you? Would your risk weights go down?
Yeah, see, the risk weights definitely will go down. Today, as of date, gold loan companies or other loan companies for us, especially for us, the risk weight today is 100. So when we approach banks for loans, especially those banks which are capital starved, they are very, very pained that the risk weight is 100, so that their capital to be set apart for giving a loan to us is actually very high. Now that it is going to be based on the rating, and since Muthoot has got a AA rating, our risk weight will come down from 100 to, I think, 20 or 25. That's a big help to the banks who are actually, there are 27 banks who are financing us. So it will be definitely a big help to them, especially capital-starved PSU banks.
Coming to you particularly, how much of an incremental positive is it for you versus before, and now that you look at it from risk weight coming down to 25%?
I think positive today we are not facing shortage from banks, but then
that was my question.
Banks will be more
in any case facing a shortage this will cover?
Yeah. So because we'll be much access, more and more banks will be more willing to fund Muthoot Finance. So that's a thing we see. Certainly, it will have an impact, at least some impact. I can't put a number to it. Some impact on the cost also.
Is there any immediate requirement?
No, there's no immediate requirement. No. There's no immediate requirement. Not that we are fund starved, but I said more and more banks will be willing to fund, and the rates certainly will come down also. This is definitely a positive sign.
How much do you reckon the rates could come down by, since you're mentioning that? No, just wondering.
I wouldn't know. It's for the banks to decide, because they are benefited because of they don't have to set apart more capital.
Okay,
I can't put any number to it.
Let me rephrase
certainly
my question.
There will be some impact.
Let me rephrase my question. In the policy, the governor was asked repeatedly about how for the larger banks the cost of funds may have come off, but for NBFCs they haven't quite come off as well. There is a rate cut that has happened. There is a change of stance. Do you reckon that over the next 3 months or 6 months, because of this and because of the move that has happened on the risk weights as well, your cost of funding would come down by 25 basis points or 50 basis points? Is that a possibility?
I think it should be definitely reasonable to think like that. Yes, definitely reasonable.
Okay. We'll leave it at that, Mr. Muthoot. Thanks so much for taking the time out and joining us and giving us that perspective. That's George Alexander Muthoot, not quite anticipating any immediate need, but the risk weights would come down, and that should essentially be beneficial for most
any
NBFCs.
Future funds that they will come in easier and probably cheaper.
Yeah, so maybe for Muthoot Finance, maybe not so much, but maybe other NBFCs would. Let's actually start off this conversation with Prasanth Prabhakaran. He's Senior President and CEO of Securities. Let's start off the conversation with him on this, then a lot of other factors too. Prasanth, good having you. It's been a while. Thank you so much for taking the time out. Neeraj, good afternoon. Just this one point, because you would understand this business very well. This whole purpose of the risk weights, RBI classifying NBFCs into 3 categories, and how for the loan companies, the risk weight now based on credit rating would mean that maybe their risk weights could come down, at least for the better credit rated loan companies. Muthoot Finance was saying that they do not have immediate needs of immediate capital to lend out, but you would really net positive for almost all of the loan companies?
So you have got to understand that the NBFC space which is there, Neeraj, is clearly an area which has been left aside by you have the private banks and the PSU banks, and that is the space that these teams have gone and occupied at any point of time. Their borrowing comes in from banks, their borrowing comes in from NCDs that they raise from the market, and so the margins that they have to maintain to end up lending into the market are far higher than what a private bank would be able to lend to, which means that the risk that you're giving to that extra beta that is there in the entire returns portfolio that is there is higher. So where do they traditionally end up looking at lending? They'll end up ending up looking at lending wherever they make that extra buck to end up compensating for the higher cost of borrowing that is there from their end. So you have real estate where builders have ended up struggling, and a large portion of most of the NBFCs have had builder financing as part of their books. And needless to say, you clearly know the amount of trouble that the real estate sector is going through. You have gold loans, you have CV financing, which are higher margin games again, because the quality of clients that you are lending to are not the ones that you would have traditionally got monies from without giving collateral at that point of time. And that has come under stress to a large extent, and that is, if you end up talking to any NBFC on the street, you will find that they are minimum borrowing. So the last NCD that has gone by or the present one that is going along is at around 11% for a AA rated paper of India Bulls that is there. Or the previous one of IIFL was at around 10.7, 10.8, which was at least 100 basis points higher than what they had been able to borrow earlier in the market. So there is trouble in the street. If we do not end up making liquidity a lot more easier for these players, there is going to be a credit cycle squeeze which will play out, and that is what you should sit and wait for it to get over with. Right now there is trouble. Though there are norms that have been talked about, nobody has talked about releasing liquidity for these players in a large sense. Banks still do not have the confidence to go ahead and lend to a lot of players in the segment because of various factors that are there. So it is a tough time that is going to continue irrespective of today's policy that has come about.
Prashant, just want some clarity on this. While they're talking about linking risk weights to the ratings of the NBFCs, the higher rated NBFCs anyways at this point in time are favored in terms of bank loans and getting lines from banks. So while being incrementally positive, does it really concentrate the lending activity in the hands of just a few NBFCs and the rest of the industry gets outcast?
I'm sorry, I'm actually having a lot of disturbance. I'm not able to hear you at all.
No, my question was related to, the high-rated banks, NBFCs rather. They anyways right now wouldn't be facing a challenge in terms of getting those bank lines going. So this particular move, does it concentrate the entire lending that happens from the NBFC pocket in the hands of the larger names with the ratings and probably creates an outcast for the rest of the industry?
So correct me if I'm wrong, you're saying whether the benefits flow to the larger NBFCs, is that what you're asking for?
Yeah.
I'm sorry.
Yeah. As in, how is it different from what they're already facing?
So it does. So you have got to understand that the last 5 to 6 year cycle that has played out, where PSUs lost market share, is where a lot of NBFCs have sprung up in the street. Now these NBFCs are finding it extremely difficult to raise money and also downsell the loans, because any time you go to downsell the loans to either the PSUs or private sectors, they are going to take the best part of the portfolio, and you're going to be left with a slightly questionable database that you have at your end. Whereas these cycles for the larger NBFCs, they have gone through multiple times. You talk about an HDFC, you talk about the Bajajes, they have seen it. The Bajaj Finance is a newer generation NBFC which is there, but it is a lot more structured. The underwriting process is a lot more stronger than many of the names that we know who has been trying to raise money. So the beneficiaries in this are definitely going to be the larger NBFCs. Along with that, the private banks, which is ending up going to have a ball because of the fact that this entire credit slowly and steadily will have to come down to these banks itself and end up playing out over the next 6 to 9 months by the time the scenario will ease down for the NBFCs.
Some numbers, by the way, just before we do the next conversation. Cadila numbers have been on for a while now, but just the reaction on the stock quite stark. EBITDA numbers marginally off, about 841 crores right now. Margins at about 23.5 versus 26.3 for Cadila. So that's the set of numbers, but on the basis of those numbers, there is an uptick that we've seen in Cadila Healthcare in the session today, so do watch out for that one. The other one that came out with a reasonably good set of numbers, I thought, was Bajaj Electricals. A while back, the numbers came out 15-20 minutes ago. I think those numbers too looked okay. The stock is up about 8%, 515 and counting today. Prashant, what have you made of, or what has the team made of earnings thus far? And does the change in earnings trajectory for any of the sectors give you confidence?
Frankly, no. It's been a very narrow rally if you end up looking at it, Neeraj. If you remove a handful of stocks from your entire Nifty basket, Nifty logically should be in the range of around 9,000, 9,200 levels. Not very happy. The earnings, which had been anticipated to be anywhere between 13 to 15% growth that is there, is actually at around 7 to 8%, which is practically half of what was the expectation which is there. So you should be seeing a correction that should be coming out in the broader markets, at least for the Nifty-based companies, which will bring the Nifty closer to a 10,400, 10,500 mark. Everybody seems to be bullish on the street and are talking about news highs. I think so. We are being a lot more conservative. We are not happy with be it the pharma pack, be it the reality. There is blood on the street that is going on at this point of time. The NBFC space, BFSI, a few banks here and there have done well, but you have a mixed bag overall, with actually more negative than the positives that are there in the entire space. The auto pack has struggled. The CV numbers we assume is going to be lower, so that means that that might be a ground effect of the slowdown in economy that we are talking about. So hopefully, though the intention is right from the RBI policy of trying to push growth out, I wish there was a little more that was available on the table, which would have taken up. Right now, not very happy with the results that have come out till date.
Okay. One particular pocket now that we are focusing on, and we are going to have a discussion following this, is going to be the auto pocket, and particularly two-wheelers. We've got, the Dealers Association saying that there is a heavy inventory backlog, particularly for the two-wheeler space. The results so far have been, not up to the mark. For the four-wheelers in particular, Maruti slipped on margins. TVS Motors, while did okay, the stock wasn't rewarded equally. You've got Tata Motors numbers coming out today. Expectations are JLR is going to weigh down. How are you reading into all of this?
So the auto pack, in any case, around 35 to 36% of the loans that are given out in this space are from the NBFC space. The rest is a distribution between the PSU and direct cash, PSU and private bank space, and direct cash that is there in that space. So a natural slowdown was going to happen, because most of the NBFCs that you have in this space are either trying to sell out their portfolios or have gone really slow in this quarter and the previous quarter that we are talking about as far as disbursements were concerned. Because first of all, they had to roll over their NCDs, their debentures that were there, and also try to make sure that their cost of funding doesn't go very high. Most of the PSU banks had raised interest rates at which they were lending to the NBFCs, but with the crisis becoming deeper, that line of credit also got stopped. Once that happens, you have a ripple effect, because credit also drives demand in a lot of these segments at any point of time. And unless that eases off, you're not going to see a substantial increase in numbers. You might have a base effect because the last 2 quarters will be low, but it is going to be only because of the base effect and not actual demand that is picking up largely on the ground. So it should be a sector that you should look at, not today, but maybe another couple of quarters down the line. By the time this credit cycle goes through a reform process, a better stabilization as far as fund flow is concerned and liquidity is concerned will help this sector overall.
Prashant, we'll leave it at that. It was a real pleasure chatting with you this afternoon. That's Prasanth Prabhakaran of ES Securities. Moving on, and like we highlighted, the Federation of Automobile Dealers Association is seeing an improvement in consumer sentiment. It further expects the TAPSOPs rolled out in the interim budget to aid sentiment. However, it has expressed concerns over heavy inventory levels in the two-wheeler space. Let's discuss this in greater detail with Ashish Kale, the president of FADA. Ashish, thanks very much for taking out the time. Dwell a little bit more on this in terms of the increase in inventory, particularly on the two-wheeler segment, which has gone up, as well as for passenger vehicles. I mean, while there are signs of some bit of recovery, these inventory levels being at elevated levels don't really assist much.
Hi, good afternoon. Inventory levels of passenger vehicles have reduced post-December schemes that were launched. Inventory levels in passenger vehicles and commercial vehicles were a concern at the start of December, but due to regulated supplies from the manufacturers and good retail numbers that you can see, they are now at a moderate level. Two-wheeler still continues to be under huge pressure. The inventory level is almost at double than the normal level. In the month of December, we had seen a huge degrowth two-wheeler retails compared to the November numbers. And even in January, if you can see, the growth is at 4%, which I don't think is something we can cheer about, coming after a degrowth of 18%. So two-wheeler retails are still under stress. and the supplies have not been regulated as were done by the passenger vehicle and commercial vehicle manufacturers. So yes, dealerships of two-wheelers are facing a stock situation at a high level.
Do you see, any measures being taken by the manufacturers now to moderate the supply and the stock that dealers already have till they actually start churning the stock?
So we are in discussions with the OEMs and also with SIAM, which is the Society of Indian Automobile Manufacturers. Through our press release also, we have appealed to the OEMs to regulate supplies, because a high stock situation is not beneficial to both of us. The situation which is there today cannot be reduced within a month, we understand that. But we expect the two-wheeler OEMs to start a reduction of inventory through moderated supplies this month. We hope that towards February end, that will be the process would have been completed at least midway, and we will see some stock reduction.
Ashish, would you believe that if indeed the inventory levels stay stubbornly high, if they do, then there would be a next round of discounts that the industry will have to give out in order to clear up this at a good pace?
Obviously, because a high stock situation, as I mentioned, is not beneficial to the overall ecosystem. So it has to be cleared. Now, whether you do it through higher discounts or you do it by regulating supplies is a call which the manufacturers have to take. We cannot, as dealers, actually comment on what road they would like to adopt. But I think going forward it will have to be done because it's not a healthy situation, and the dealer today is facing a tough situation due to this high inventory. So yes, if in case retails remain at the same pace, either they will increase the discount level and try and build up higher retails, or will have to reduce their supplies to the dealership in tune with the retail situation as of today. In passenger vehicles, we saw that with higher discount, there was a good movement towards end of December. As you can see, the numbers that we have put out, there is a 34% growth in registration in the RTOs that we've covered. So one of the key reasons was that most of the manufacturers of passenger vehicles extended their discount schemes from December into January. And there were a good number of new launches which sort of added to the overall excitement, and we could see consumer concluding his purchase decision. December we had seen consumer interest being high, but somehow he was postponing his purchase decision, which towards end of December we saw him concluding. So retail numbers in the last week of December were good, which gave confidence to the manufacturers to continue the discount schemes, and we have seen good results of that. So probably in two-wheelers that will have to be done if the situation so arises, because as I told you, that stock reduction is something which is important for both of us, the manufacturers as well as the dealers.
Okay, Ashish, my final question, which of the, because you would have a sense and a pulse of which of the brands are facing the highest amount of inventory pushback or the inventory level build up, where within two-wheelers, where within four-wheelers is the inventory looking particularly worrying?
So we are, as an association, we are not tracking brand-wise. We take a general feedback from all our dealers and we track the entire vertical. It won't be correct for me to comment because I do not have brand-wise data with me. But inventory levels as an entire vertical in two-wheelers is a cause of concern. So I think it will be fair to say that across brands, today the inventory level is high. Of course, based on the geography and based on the brand, it might differ between the range that we have given. But overall, two-wheelers as a vertical is carrying heavy inventory and the dealers are facing a high inventory situation. So I won't be able to comment on brand-specific inventory levels in that.
Okay, fair call, Ashish. We'll leave it at that. Thanks much for joining us and giving us that perspective. That's Ashish Kale, President of FADA, talking about inventory levels being high. We'll talk about this with our fundamental guest as well, but it's 2:30 or thereabouts, actually slightly over that. Let's get in our technical experts on board as well. Rahul Randeria, at least, independent market expert, joins us right now on the show with his thoughts. Rahul, good having you. Thanks for joining in. What's your approach to trade today? We are near about 11,100. Nifty Bank about 1/3%. What next?
Yeah, if we see, and we have been discussing in the earlier shows also, that Nifty has for the last 4 months struggling to take out the levels of the 11,000 mark, and today we have seen, after 7 days of rally, we have seen Nifty took out 11,000 mark. It is sustaining about those levels, but last 7 days we have seen a rally of almost more than 550 points. So definitely we could see some sort of profit booking at current levels, but overall undertone being bullish, I would wait for some pullback to enter long at the lower levels. My positional target in Nifty is around 11,266 on the spot. To be precise, if I would wait for Nifty to take a support around 11,000, which is a psychological mark, and that would be the ideal levels to enter at those levels. Stop loss should be placed below 10,960. Today being Bank Nifty expiry, it has been highly volatile. Even in Bank Nifty, we have seen a 1,200 points of rally in last 7 days. So definitely we could see a sideways movement for maybe a couple of days, and then we could see a next leg of upside rally towards the level of 27,800. So any correction from current levels, maybe 1%, maybe tomorrow, today or tomorrow, should be used to buy at the lower levels. Stop loss should be placed below maybe 27,200. So I would, today expiry day, I feel that it could be a flat to positive close. So definitely any pullback from current levels should be used to buy at the lower levels.
What about your stocks, Rahul?
Yeah, I have 2 positional calls. First is a buy call in ITC. The stock has been seen some sort of support at the lower levels, supported with strong volumes. Definitely swing traders can buy at current levels, which is 280 to 275. Positional target 300, stop loss should be placed below 271. Second buy call is in Piramal Enterprise. Traders can buy in the range of maybe 20 to 40 to 2200. On the upside, target would be 2414. Stop loss should be placed below 2079.
Okay. What are you making of Raymond, today's plunge that we are seeing in the stock?
Yeah, the stock has been on a corrective mode since very long period of time. And today being a sharp sell-off, I feel that this sell-off could take a pause around the 640 to 630 odd levels. That would be the area where one can buy. But as of now, I feel that some maybe couple of percentage downside is there. So one should wait for the price to get stable around 635 to 640 and then take a call. So definitely the momentum is weak, but I would wait to buy at the lower levels.
Okay, and the other one is of course Z, which is continuing on its merry ways. We'll talk about that as well. But let's first hear out from an important market voice. Past records have shown that alliance governments haven't been too good for the Indian equities, and that's prompted Rakesh Jhunjhunwala to push for a Narendra Modi-led government. Addressing a gathering at the Telecom summit in Mumbai, he said the government led by the Mahagathbandhan would only complicate matters.
See, it's very difficult to judge because I will really fathom to predict the elections only 15 days before the actual voting. And the elections, I'm told, are going to be held from the first week of April to the third week or second week of May. Right? It's a long election. But I personally feel India is greater than personalities. I would very much like that Mr. Modi becomes the Prime Minister of this country again. And I think my personal judgment at this moment says the BJP tally will surprise on the upside. And you know what is this? UP mein 40 aayegi, bolega nahi, 15 is more appropriate. What is the basis? Right? I've got so many lists here. Maharashtra party, how much BJP will get, how much, no basis anything. So, but I feel BJP will come. And second thing I want to tell you, was India grows not because of politicians, but in spite of them. Right? So, another thing also how immaterial they are that, you know, the Nifty the Sensex made a low of 2800 on September 12th, 2011. It was 6,400 when the BJP government lost the elections, which they were widely expected to win in 2004. In 1 week, the Sensex was at 4,400. And in that term of that government, it was at 20,000. Right? And when Mr. Manmohan Singh was re-elected without communist support, and the Congress had 200 plus seats, the Nifty went up by 40% in 2 trading days. And never went above that. Or it remained around that for the next 5 years. So I don't know why these people have this obsession about elections. Not realizing that India is greater than political parties, individuals and elections.
So why do you want Mr. Modi back?
Because I agree with his policies. You don't agree with Jan Dhan. You don't want everybody to have a bank account. You don't agree with everybody should have a toilet. You know how I describe Mr. Modi? He's a distilled socialist. Who is a socialist? Who's fighting that, give me more piece of the cake, more piece of the cake. Mr. Modi is also fighting for more piece of the cake. But he knows as a capitalist, he should first try and increase the size of the cake. Right? And then fight for the share. If Mr. Modi may not meet you and me, but if he comes to know that there is a potential American who will invest $1 billion in this country, he will meet him at 3 o'clock in the night.
Well, that's Rakesh's view on what he desires from the upcoming election. Okay, let's talk about the markets. A bunch of stocks flying around, as we said. A lot of large caps, some mid caps. Vineet Puninchkar of Venture Securities with us on the show to talk about all of that and more. Vineet, thanks much for joining in. I know you track a lot of these large cap. I mean, I would have loved to talk about some mid caps as well, but just that the large caps have a lot of activity. So let's start off with those. Were the Taro numbers so good that they bring about a 5% reaction in Sun Pharma? And by and large, what's the investment advice for somebody who's looking for one when it comes to Sun Pharma or Sun Pharma Advanced Research?
So my advice would be to again stay away from Sun Pharma. Given that you have corporate governance issues, you never know what could crop up when. You know, we have just seen histrionics in the market. So we've had some reports which have come out of the press, but there has been no legal action being initiated against the company. And if you remember Prakash Industries, which was tom-tommed, and recently it had gone up, and then suddenly out of the blue you have some corporate action coming in from the government side. That can really hammer the stock down, and you can lose a lot of wealth in that. And we have seen that happen time and again in a number of stocks where there has been corporate governance issues. So while the Taro number is great and the stock has moved up, I believe that there are substantial stories in the pharma space, the API chemicals, or you talk of agrochemicals, which are quasi, which have got chemistry or pharmaceuticals along with that, with the API spaces there, which have got huge growth prospects. And, you'll get a number of names in the mid-cap sector. So just to name a few, I could talk of DB's Lab, Subin Life Sciences. These are good quality pedigree stocks offering you great growth stories. So I would want to be in these stories, and preservation of capital is my primary aim. So Sun Pharma would absolutely be a no-no for me until, I get a clearance from either a SEBI or from a government office that, there is nothing wrong with the company.
Okay. The other one, Vineet, the last 3 days that has been moving around is Z Entertainment. Now, up 6-7% day before yesterday, about 6% yesterday, another 4% today. It's now nudged closer to, or in fact, eclipsed the 400 mark. Is this a hope trade? Is it people buying because they believe the valuation of these companies, or was at least back then, very low? Or is it somebody buying in because a deal might be in the offing? What's your sense?
So my sense is that people would be buying because there's a deal in the offing. And if you were to just, gauge into what is happening internationally with direct to home and direct to consumer and the OTT space, there are massive losses coming in, and there are mega acquisitions planned in the pipeline. And you're going to have the entire media space up for disruption and up for grabs. So the upside in Z would be someone wanting to do a strategic buyout. That would be the play. But if you take into consideration that the disruption that is coming about, it is going to be a big hole in the pocket for Z. I think the best days are behind us, and Z5 will need a lot of investment, and you wouldn't know whether it would be a great success story, because if you take all disruptions which have come about, the leaders of the packs have been all unknowns. You talk of Tesla, you talk of Amazon, you talk of Netflix. So you really don't know who's going to be the leader and who's going to get burnt. So given that fact, I think Z is more of now Z is a play for a strategic sale. And if one is offered and if the price looks attractive, one should take the opportunity to exit and then review the situation once the mediums all settle down. So that's my take on Z Tele.
What's your take on the announcement with regards to the NBFCs in today's RBI policy, specifically to the ones which are the higher rating NBFCs, and now their risk weights will be attached to their ratings?
So I need to have a little relook at this and study it more deeper before I comment on this. So I would reserve my comments on that for the time.
Two stocks, Muthoot and Manappuram, both of them, with regards to this particular announcement, have done exceptionally well in today's session. We just heard the management of Muthoot Finance also saying that this is indeed a big positive for them, though they're not in any need of any financing right now. Manappuram Finance also good numbers, and the stock's up about 7.5%. Rahul, on the charts, Manappuram, Muthoot?
Yeah, if you look at Manappuram, last 2 days has been seen a very sharp rally, which was a 90-degree one. So definitely the momentum is positive, but it could take the momentum could take a pause around maybe around 107, 108 mark. But any profit booking from the current levels, maybe in the range of 100, should be used to buy. Positional target would be 116, 118. One should place the stick stop loss below 190, but one has to wait for some sort of pullback in Manappuram Finance. Definitely, the momentum in Muthoot has also been significantly positive in the last couple of days. So I would wait for some cool off, as I don't want to go and just buy the stocks which are running away. I would wait for some price cool off.
Does the selling pressure continue for the metals pack as a whole? Talk about JSW Steel, one of the top losers on the index, Hindalco, Vedanta.
Yeah, if you look at the metal packs, these stocks have been under pressure from last couple of months, and the sell-off has been started showing some sort of exhaustion. Yes, definitely the prices are under pressure, but the severe correction which we used to see a couple of months back have taken a standstill. So definitely it is into making a base. It will take some time, but yes, definitely any correction from current levels or consolidation should be used to buy, but it will take some time for a trend reversal. So I would watch out for Tata Steel as well as JSW Steel, for an upward rally from current levels. Maybe we could see maybe 10 to 15% of rally from current levels in next 3 to 4 months. But it is going to be a short-term investment call, not a trading call.
Vineet, steel as a pocket, I mean, they've been bogged down with the fact that, the demand slowdown has happened, global demand slowdown has happened. They've not been able to raise prices, and now the prices of iron ore may see a significant uptick as one of the world's largest iron ore manufacturer, Whale SA, has actually enforced force majeure on a few of its contracts. So that could push up the prices of iron ore, which again could be a sort of a double whammy for these steel manufacturers.
Yes, so the guys who are backward integrated in iron ore would not be impacted to that much extent. So we believe that Tata Steel, to a large extent, and maybe SAIL, would be a beneficiary. JSW Steel, which buys its, outsources the entire raw material, would get impacted severely because of this.
What else? Today there's been a massive cut yet again for the ADAG group stocks. And Raymond as a stock is correcting about 10%. As we speak, it's staying about 10% lower. So, and on fairly high volumes, I might add. So that's the other one. And Cummins India, with the 4.5% downtick, is also standing out. And the margin picture not the best. Hadrien Mendonca of IIFL with us on the show. Hadrien, good afternoon. Are you buying the index at the current level?
Hi, good afternoon, Neeraj. And yes, absolutely, we are buying. In fact, we are, buyers. Once we saw the 11,000 mark broken pretty convincingly in yesterday's trade, I think it is pretty clear that the ascending triangle pattern, which was being formed on the daily charts, has been broken. This is the second consecutive day where we are seeing this breakout, is sustaining with fairly good participation, from the heavyweights, and also with a mix of mid and small today. Now, if we continue to sustain above the 11,000, 11,050 zone for another couple of days, I think I wouldn't be surprised to see the mid and small cap, play a catch-up role going forward. So there could be a lot of, limelight and a lot of demand for these beaten down stocks. So I think mid cap, small cap is a space where one can, focus more on. As far as the Nifty is concerned, I think 10,900 should be stop loss on every long position that is held on, a long for the Nifty. 11,600 is the very conservative target that the ascending triangle pattern is throwing at us. So I think definitely any kind of declines towards the 11,000 levels, towards the 10,900 levels should be good opportunity to go long. As far as the Bank Nifty is concerned, I think Bank Nifty is poised for a very, very large, classic cup and handle pattern breakout. Now, what are the levels above which we could see the breakout? Is this the 27,800 zone? Once we see that happening, I think Bank Nifty has all the power to catapult the Nifty and overall markets much more higher from here on, and even the all-time high levels can come back. But 27,800 is something that I'm really keen on, and watching pretty closely, because post that I think it could be a good, strong up move from here on. So yeah, on the downside, on the conservative target that I am seeing for the Bank Nifty is the 28,400 on the upside post the 27,800 breakout.
But stocks, Hadrien, any fresh trades that we can initiate?
Yeah, Dabur is one stock that has really broken out afresh from a consolidation breakout. I think not only a short-term trade but also on delivery-based buying, one can consider going long on a Dabur. In the short term, we are expecting a target of 469, placing a stop loss at 457 on the downside. Second stock that we are pretty bullish on is Apollo Tyres. We're seeing a lot of tire companies, staging a pretty strong comeback, including Seat. So I think Apollo Tyres is another stock that is showing signs of a recovery, and one should not miss out on these recovery trades. So I think one can go long for a target of 215, keeping a stop loss at 205 on the downside.
Was a consensus trading idea since last afternoon, since yesterday's countdown show. The stock today should pull it up to see what it's doing in trade, up about 1% or so at 812. Hadrien, would you concur to UPL being a long trade?
Yes, absolutely. I would concur on that trade because UPL, has been on a roll in the past couple of weeks, and I think if you check the weekly charts, we are witnessing a flag pattern breakout. And mind you, flag pattern breakouts, they give you pretty fast move on the direction which they have broken out in. So I think UPL definitely keeping a stop loss of close to 790. I think on the upside, 850 to 865 cannot be ruled out. So definitely buy on a UPL from these levels as well.
Vineet, if a client has shares in the Anil Dhirubhai Ambani Group stocks, and I'm choosing two companies very specifically out here. One of them is Reliance Infra, the other one is Reliance Nippon Asset Management. And if you would ask your team about what to do with these names, what would your recommendation be?
Reliance Nippon would definitely be a hold, and so would Reliance Infra.
Reliance Infra would be a hold?
Yeah, and Reliance Nippon would definitely hold on to it because there's a lot of, it's been managed well. So I guess Reliance Nippon would definitely be a hold.
So, yeah, I mean, I don't think anybody would debate that on Reliance Nippon for sure with you, Vineet. But Reliance Infra, the concerns around the high leverage, etc., is a bit worrying. I mean, even if you don't take into account the accounting, it's not an issue, but there is lack of clarity about the money that they wrote off, 860 crores. But even if you don't take that into account, and let's assume all of that was above board, the fact that they have to write off such huge chunks and the leverage remains high, is that not a concern?
That is definitely a concern because, we had wanted to initiate about a couple of years back. And when we came back, we were not really satisfied because on follow-up calls, there was lack of clarity on data that we had asked of them, especially around the debt issues. So Reliance Infra is a concern area for me.
Okay. Vinit, just stay on. We'll take in final thoughts from you, but because you would be knowing about this space very closely, let's just get in the Grasim numbers. And I told that those numbers are out. Let's just see how they are coming about. 1.9% for Grasim. Just waiting for the numbers to flash on your screens and then take it. Vinit, what do you? I mean, I'm presuming you track Grasim.
Not that attentively.
Okay, fair call. Never mind, Vinit. We'll probably ask you for your top idea in just moments from now, but just wait for the Grasim. Okay, while we wait for Grasim numbers to flash on your screen, Vinit, did we ask you about your one top recommendation? And if we haven't, what is it that you're recommending and why?
So we are recommending Petronet LNG. We continue to recommend that. So there are two things. One, the previous result was slightly soft due to one particular one-time wage inflation. And this quarter, they have upgrading their facility from 2.5 lakh to 5 million TPA. So the work is going on. So what has happened is that your 120% utilization has come down to 90%, which is a cause for concern. And your Cochin pipeline, the Kochi pipeline, which was expected to be done up in December, is now postponed to March. This is what GAIL has said in their con call. So we are expecting all these things to come up and capacities are coming up on stream. And we believe that there is significant intrinsic value to Petronet LNG. It is very core to the CGD business and for industrial gas. So you're getting a very high quality stock at very, very decent valuations with a lot of margin of safety. In fact, mutual funds have been aggressive buyers in this quarter also. So that adds to my conviction. And I believe that, if you hold on to this stock with a slightly longer perspective of 1 to 2 years, with very minimal downside risk, I think there is good money to be made without losing your sleep on it.
Okay. We'll leave it at that, Vinit. Thanks so much for taking the time out and being with us. As we speak, the Grasim numbers are out. Grasim numbers are out on your screens. Net income, 960 crores, okay, which is the net profit, of course. We're waiting for the top line numbers to come out as well, but consolidated net profit at 960 crores seems to be a, reasonably decent number from Grasim's.
From 543 crores same quarter last time.
Yeah.
That's the only number we have as of now. So we'll wait for the sales numbers, as well as if at all we get any sort of volume detail that would be helpful as well. To determine what kind of a quarter it has been for Grasim. As of now, just one number, and that's 957. Rahul, would you be a trader in cement as a pocket? And if you had to take a position on Grasim?
Yeah, last 2 days, including today, the stock has rallied sharply from the levels of maybe 700. Some more upside could be seen from current levels. Maybe the major resistance is at 70. So those who have bought maybe yesterday or today morning, one can try to book profit at 770. The stock was into oversold territory. It is a technical pullback, but definitely in the coming days or coming weeks, we could see a trend reversal. But for short-term traders, those who have bought a couple of days back can try to book profit at 770 and then wait for some cool off to enter for positional trades.
Hadrien, I just asked Rahul his opinion on two stocks from the NBFC space, that's Muthoot and Manappuram Finance. Would you also be of the opinion that these stocks could be traded in from a long perspective?
Yeah, absolutely. Specifically Manappuram Finance, if you see the daily charts, we have seen Manappuram breaking out above its long-term 200-day moving average. Secondly, we are also seeing a positive crossover on the moving averages. That's actually accentuating our bullish stance on Manappuram Finance more than anything. Even if you see the relative strength, it is showing that the momentum will continue going forward. So I think Manappuram Finance, from a delivery-based perspective, if you have a 1.5 months view, I think one can play for a target of 120 to 125. On the downside, keeping a very strict stop loss close to the 98 to 97 levels. So definitely Manappuram Finance could be one of the bets for the next 1 month.
Okay, let's take a break on that note. We'll come back in moments from now from the break and continue our discussions with all our guests on some of these stocks, get to the Fab 4 stocks of the day, what dealing rooms are recommending, and then some closing strategies. Stay tuned to Bloomberg Fin Live.
Celebrating 100 years of Smile Services Assurance Excellent Commitment. Building beneficial relation with customers and stakeholders. Union Bank of India celebrates its 100th Foundation Day. Good people to bank with.
RP Sanjeev Goenka Group. Growing legacies.
Today we are meeting Royston Abel, theatre director. Royston believes you don't need words to tell stories. There is no way to describe what Royston does, because what Royston does defies definition. Can you say that about anyone else? To be so fiercely individual, yet create music and theatre so accessible, so easily understood and felt and appreciated. Not just at home, but the world over. When he turned his eye homeward, he created shows that travelled the world, bringing it a glimpse of our culture. The Manganeer Seduction, the Manganeer Classroom, 100 Charmers and the Kitchen. Watch his exceptional story, Pursuits by Skoda, only on Bloomberg Quint.
Celebrating 100 years of Smile Services Assurance Excellent Commitment. Building beneficial relation with customers and stakeholders. Union Bank of India celebrates its 100th Foundation Day. Good people to bank with.
Left to go for market closing, and the Nifty still holds comfortably above that 11,000 mark. In fact, very close to 11,100 right now. Remember, we were talking about 11,090 being a very crucial point, beyond which you could take further long positions as per our technical experts, and it seems to be holding pretty strong. The last few days, in fact, the start of the Feb, the foreign institutional number also, the FII number, has definitely been positive. Yesterday, again, another 700 crores being bought by institutional investors, foreign institutional investors. Let's see how today's number shapes up. But let's take a look at the volume and also take a look at how Europe is trading before we go on to the Fab 4 stocks, or let's do that post Fab 4. 1593, that's the F&O, but that's also because of the bank Nifty options expiry. And you've got the cash market volumes, 26,881 right now. So that's doing okay for itself. Not a very high number, but still doing okay. Europe as a pocket is down, mixed bag actually, flat to negative for some of them. CAC is down marginally, DAX is down 0.5%. So no major cues coming in from that part of the world. But let's find out what has made it Yash Upadhyay's list of Fab 4 stocks. Is an easy market to do some stock spotting.
Yeah, it is in fact, Devina. So I'll start with Bajaj Electricals, which just recently came out with its Q3 numbers, and a strong number at that. The stock is up 8.5% at this point. Their revenues have grown by about 74% to 64 crore rupees. The revenues have grown by about 89% to 2,156 crore rupees. Net profit has almost jumped to 74%, coming in at about 64 crores, as well as margins in the high single digit, coming in at 6.1%. So all in all, a good set of numbers for the company. Most of the NBFCs, they are reacting positively after the RBI in its monetary policy meeting revised the risk-weighted guidelines for NBFC, Muthoot Finance being one of them, according to brokerage firm Antique, which would be a beneficiary of this, and the stock is up about 6%. Havells India is up 2%, had rallied more than 2.5% in the start of the day to hit a fresh 52-week high. So watch out for that. Volumes too coming in significantly higher, and along with that, Repco Home Finance up 2.5%. We're seeing fresh longs coming in with open interest build up of more than 11%. Back to you.
All right, Yash, thanks a lot for that. That is the Fab 4 stocks of the day. I just want to quickly look at what's moved in the last 1 hour of trade. Should pull up a Z and Eicher Motors, Coal India. These are all the index stocks that have moved up in the last 1 hour of trade. Z is now up 5%. That's the high point of the day. So is Eicher Motors at the high point of the day, 21,900. Coal India, too, again, high point of the day. HUL is the other one, and an ICICI Bank. Both these counters lifting off from the day's low. ICICI Bank, they're now flattening out. So moved from the lows of the day right now to just about meander in the green. 359 is where that stock's trading at. All right, moving on then. Reliance Jio is the newest player on the block, and perhaps only natural then that it also spends the most. But what's possibly going to take all by surprise is the difference between its capex and existing players. Sharad Dubey, he's here to quantify it for us. Sharad.
Well, hi Devina. The divergence of amount spent by Reliance Jio and other private telecom operators is at its highest. In the December ended quarter, the Mukesh Ambani controlled telecom company spent around 14,000 odd crore rupees, or nearly 3 times more than the combined capital expenditure of Bharti Airtel and Vodafone Idea. Now, if we see the intensity of the capital expenditure, it all reduces for all the telecom operators in the third quarter of financial year. But Airtel and Vodafone's Idea capex dropped by almost 47% compared to the last quarter, while that of Reliance Jio fell by only 12%. And the additional spend is helping it to add more subscribers to its kitty.
Okay, Sharad, we'll leave it at that. Thanks so much for taking the time out and giving us that update. Let's get on to the story that is well, an interesting case really. Raymond's promoter Gautam Singhania and his family run an unlisted company that offers a whole host of services to the apparel manufacturer. Now that's not unusual. What is the premium that Raymond has been paying over the last 4 years for the services provided by this company. Aman Kapadia, who's gone through all of these numbers and the filings with the MCA and the annual reports, joins us right now with the details. Aman, interesting story. What is this bit of research and investigation revealed?
So in last 4 financial years, Raymond has been selling goods to the promoter entity and buying it back from them at a sizable margin for secondary packing apparels. Now when a company does any secondary packing or any other processing work, it charges a fee. Raymond did pay job work charges worth rupees 30.44 crore in last 4 years. But with that, it also sold and bought goods back from JK investors. In last 4 financial years, Raymond sold goods worth rupees 993 crores and bought goods worth rupees 1630 crores. Also, Raymond paid a sales commission of rupees 22.85 crore. What's interesting is that JK investors sold all goods to Raymond. So it paid commission on goods sold to them in last 4 financial year. JK investors has made profits of 183.16 crore rupees, which is almost a little less than half of what Raymond made in the same period.
So just a minute, let's now tackle this piece by piece. JK Investors is a promoter entity where I believe Gautam Singhania and family hold considerable stake or all the stake?
JK Investors is 91% owned by Gautam Singhania and rest 9% is owned by other family members.
Okay. Now, in the story that is there on the website as well, by the way, viewers, for all those who want to read more about this story, it's there on the website bloombergquint.com. So do go on and read up that story as well. I'm looking at this story and this graphic which is done from the MCA filings. You've highlighted 4 years, 2014-15, 15-16, 16-17 and 17-18, wherein you are talking about purchase from Raymond worth X crores and the total purchase was worth a higher number. What are we trying to say via this? That Raymond sold goods and bought back the same goods at a higher price?
So basically all of JK Investors sales in last 4 years made up of sales to Raymond.
Right.
So all of JK Investors sales to Raymond. So whatever goods JK Investors would be buying, it would be selling to Raymond.
Right.
So in this way, Raymond sold goods to JK Investors and bought them back. And in the middle, JK Investors was earning margins. Moreover, they paid sales commission. Now you pay sales commission to sell outside party, right? To a third party. Now they were paying sales commission to JK Investors to sell it to them.
Okay. So you're saying that if JK Investors, the moot question is if JK Investors does secondary packaging work for Raymond, why would it need to buy goods and resell them to Raymond?
Exactly. So generally when a company does any secondary packing or any other processing work, it charges a particular fee for that. And it has paid around 30 odd crores. Raymond has paid 30 odd crores to JK Investors for the same. So what was the need of selling and buying it back if only secondary packing work was being done by JK Investors?
And there are no costs for the primary business of packaging that the company apparently does.
Yeah. So basically when a company does any processing work, it would have incurred cost of materials consumed. Basically whichever material it was have consumed, it would have been shown in the financials as cost of material consumed. So the company in last 4 years has zero cost of material consumed. That shows that company did not do any manufacturing or processing work in these years. It was just trading in goods and maybe doing secondary packing themselves or via third party.
What's been the company's response, Saman?
Company said it didn't want to add anything further, and it showed and highlighted us towards the exchange filing, which said that they'll work it's somewhere or the other see on it, but they didn't specifically comment on our questions.
Okay. So these are queries that are interesting. I think Aman, who's done this story, wrote to Raymond as well asking for comments on all of these, to which the comments haven't been too forthcoming. Okay, great, Aman, interesting story. Thanks so much for bringing this to us right now as well. And viewers, we repeat, for everybody who wants to read more about this, do log on to the website bloombergquint.com. The story is there on the homepage, so do look at that. Raymond for itself as a stock at a point of time was down about 10-11%, currently trading about 7.5% lower. Purely from a trade perspective, Rahul, would you initiate a fresh trade on Raymond at the current levels?
Yeah, as we discussed earlier, the stock has been under pressure from a very long period of time. The swing high was 880 and today it has made a low of 722. So already the price have discounted whatever the negative news would be. Today the volumes are very high, and at the lower levels, as we discussed, that we have some sort of supportive action. But as I said earlier, that I would not go and jump right now and buy the stock. I would wait for some price stability, then would wait for some reversal. But definitely I will watch out for these particular levels from 630 to 610 levels, where the price could get stable, because the oscillators are still not into a buy mode. But I will wait for price to get stable and then we'll take a call.
Some answers need to be forthcoming essentially for almost all issues around all companies. Now, you know, the interesting bit today is that it's not just Raymond which has fallen, but a lot of companies on which answers haven't been forthcoming have continued to fall down. I don't think Prabhat Dairy has fallen much today, despite the fact that there was some change in the date, but it's up. It's actually up about 5%. They have taken the decision to merge that the cheese company, which would essentially be the holding company of the business, into itself. I would presume that the market would want to see that this is a precursor to a dividend, because had the dividend come in from the cheese company into Prabhat Dairy and from Prabhat Dairy to shareholders, then there would have been double incidences of dividend distribution tax. This, the market would want to believe that would reduce one of the incidences of the dividend distribution tax. That stock is up 5%. This is my presumption, of course, but yeah, the stock is doing well. What is not doing well? Reliance Power and Reliance Infra. Let's get in our next fundamental guest on the show, Vivek Mavani, independent investment advisor with us on the show. Vivek, good having you. Thanks for joining in. Reliance Infra, I don't know if you got a chance to look at the numbers and the write-offs that they did, etc. We were trying to get to them to ask what's the nature of this write-off that they've done and written off against the provision created in Q2. We haven't gotten the answers as yet. I don't know if you've read too much into it. And what do you make of the 2 days of almost 30% corrections that we've seen in Reliance Infra?
Well, actually, to be very honest, I'm not surprised that you haven't got very clear answers from the management. And quite honestly, it's not just now. Even in the past, I've heard several other market participants.
No, I'm saying we haven't gotten any answer. I'm not saying that they've been evasive in giving a dodgy answer. They haven't given us the answer.
Yeah. Well, whatever answer you do get, you could probably, I would say, enlighten everybody. But what I've been referring to was that even in the past, market participants have sought clarifications about certain numbers in the P&L of the balance sheet, and they haven't really got clear answers. Right now, you haven't got an answer, but even if you do get an answer, whether it's a very clear answer is the point I was referring to. I don't want to have a specific comment about Reliance Infra, but one thing is clearly a trend over the last few months is companies that have either leverage or corporate governance issues or both are just getting punished and beaten down, even to levels significantly lower than what the intrinsic value of the business, or in some cases even the assets. I mean, in some cases, just the asset value would be significantly more than the market cap that the market has just beaten down. I mean, it's just from the market participants' point of view, it seems to be like a risk-off trade. Let's not even touch any of these companies with a barge pole, even if it means selling it at rock bottom prices or even below the asset value prices. But as far as ADAG hammering of the stock price in the last few days is concerned, I would sense that Reliance Capital, of course, will also have some issues on the NBFC side, but as a whole, holding company for other businesses, which is the mutual fund, the two insurance companies, etc., and plus some other strategic investments. They call it strategic. I mean, I've never understood what is the strategy behind it, but other miscellaneous investments is like significantly lower than the asset value. One could sense that. And because Reliance Capital is a very tightly regulated business, all aspects of the financial markets businesses are very tightly regulated. I mean, the case for hanky-panky seems difficult. I mean, if there was any hanky-panky or things that are difficult to understand, they would have come to light by now. The fact that we still haven't got any, I would assume that Reliance Capital is relatively a clean business or a clean balance sheet. There could be some write-offs on the NBFC side of loans to group entities, which we are still not very clear about, but my sense is it wouldn't be very high.
Okay.
Right. Hadrien, Mendonca, I mean, we got your opinion earlier on about some of the bigger movers within the ADAG group, but leaving that aside, in the last half an hour of trade, is there anything that has caught your attention?
Yeah, it's PFC that is doing really well. The stock has seen a very good breakout from a symmetrical triangle pattern. What's more interesting is that any kind of fall that we saw in the past 2 to 3 weeks, the stock has not broken below its 50-day moving average at all, which is actually showing good strength, and every decline is being used to accumulate. PFC is finally broken out from a symmetrical triangle, and I think one can consider going long on PFC. That will also be the strategy for tomorrow as well. So going long on PFC, keeping a target of 111, strict stop loss at 103 to 104 on the downside.
Your closing idea as well?
Yes.
All right, PFC.
PFC would be it.
Yeah, okay. So that's Hadrien's call. That's his closing idea. He's given it a few minutes early, but that's its call. Let's move on. It's time now to look at dealing rooms and what they're recommending this afternoon. Yatin Mota and Darshan Mehta are here with their channel checks. So let's start off with you, Darshan.
Yeah, so one of the stocks that's been spoken about is Bajaj Auto. Very strong build-up seen on the counter also. On the long side, it's up almost 3%. But we've seen that attraction has returned to some of the auto space, especially the two-wheelers. Dealers believe that the momentum probably will continue in Cadila Healthcare. The other one is South Indian Bank, which is up almost 7%. The last time I checked, it's up 6%. The buzz among the dealing room is in the next MSCI rejig that will happen. There could be a probable inclusion of South Indian Bank. That's what's been spoken about. And Pidilite is the last stock that dealers indicate that some of the HNIs some of the dealing rooms deal with have indicated that there is positional accumulation of Pidilite. So that's been spoken about. But Yatin, what are you hearing?
Well, PFC, REC, these are two power financing twins which are doing well in trade. Dealers are of the view that here there could be a good strategy for buy today, sell tomorrow, and that is the recommendation that they are giving to their clients as well. So PFC, REC, do watch out for both of them, have been quite active, especially in the future and option segment. Grasim just reported their numbers, and ahead of the numbers and post the numbers also, we have some domestic fund buying which is happening in the stock according to dealers. So watch out for this one. Dealers are recommending a buy here as well, a bounce back candidate after the recent correction. And Nestle has been hitting new highs on the back of FI buying. So dealers are bullish on few of these FMCG names as well.
Okay, thanks a lot for that, Yatin. That's what dealing rooms are talking about. Would probably want to talk a little bit more about Tata Motors and the numbers that it would be reporting shortly, post Mangaras. But JLR is going to be important to watch out for. Revenues are seen down for JLR by 1%. EBITDA is seen also down 2% and profits down by 2%. The margin numbers, particularly on the JLR side, are important factors to watch out for. Tata Motors standalone margins are seen at 7.7 to 8%. That's the range that you're talking about. Revenue seen at about 78,750 odd crores, which is an uptick of 6%, while the EBITDA on a consolidated basis is expected to come down by 2.8 odd %. Vivek, for Tata Motors, what will you be watching out for?
Well, in Tata Motors, clearly the data points to watch out for would be the JLR numbers, especially the just slowdown in China and maybe in Europe as well. But it's difficult to comment on Tata Motors. The stock has been hammered significantly and difficult to really take a call. So for me, it's things that they're things that are difficult to understand or decipher. I would just stay away. I mean, the choice between losing an opportunity and losing money from even at whatever levels. I would simply let go of the opportunity. In case of Tata Motors, at 400, people thought, hey, it's corrected enough, it's cheap. At 300, 200, now it's at 180. So I would just not want to stick my neck out.
Grasim, did you have a look at the numbers? Profits came in at 608 odd crores.
I have not had a chance to see the numbers.
Right. But would you consider cement as a pocket that of interest?
Not really, because two things in cement. Volume growth continues to be muted. That's number one. Capacity utilizations are barely about I would say just about 70-75% for the industry as a whole. Probably even the best companies are only doing just about close to 80%. So pricing environment in cement is still weak, while inflationary trends as far as the input costs are concerned are having a squeeze on the margin. So cement is something that I would avoid at least for now. And my sense is much of 2019 cement will probably just be range bound and do nothing.
Okay. By the way, the one that has really remarkably shot up in trade today is ICICI Pru. That one is up about 8% or 9%. This is the biggest gain that we've seen in the stock since listing, if I'm not wrong. And after getting beaten down quite badly until recently, I think this would be a remarkable move. Just pull up the 6-month chart of ICICI Prudential if we can, or a 3-month chart would also help. But as you can see, it fell and fell quite considerably from the levels that it used to trade at. This is a big, sharp pullback. Wonder what's happened to HDFC Life. If anything, and SBI Life should pull up those as well. HDFC Life trades at a substantial premium to ICICI Prudential. Should get HDFC Life and SBI Life too. SBI Life is okay. It's probably found mentioned amongst all key brokerage houses as one of the top ideas. HDFC Life, because of the valuations, are pegged back, but 368 or 369 and counting, good going. Before we take in closing strategies from Rahul Randeria, a thought on ICICI Prudential, Rahul, very quickly.
Yeah, Neeraj, as you said that we have seen a very sharp rally in the last couple of months. So definitely, as we see that the stock has made a bottom around 280, which was just almost a similar bottom when after the listing. So definitely means the institutions or whatever we call the smart money would try to defend at those levels. So definitely at current levels, we could see an extension of this rally. We could see some sort of cool off consolidation at current levels, and then we could see a next leg of rally towards a level of 330. So one could wait for some cool off from current levels. Maybe at the ideal level to enter would be around 298. Stop loss should be 290 and target would be 330. But any correction should be used to buy.
Okay. What about your closing strategy?
I have one buy call, which is Strides Pharma. The stock has been corrected sharply from the levels of 550. Today, some sort of supporting action has been seen at the lower levels, and even we have given a buy in the morning. The momentum is positive. One can buy at current levels. Stop loss should be 411. Upside positional target 460.
All right. 7 minutes left to go for market closing. Vivek, is there any particular company that looks investment worthy from a 1-year horizon?
Well, I would continue to stick to the safe havens, which is in the consumer space, which have companies that can deliver or have been delivering numbers consistently quarter after quarter. And the names that come to mind is Titan and Asian Paints. I would add ITC as well. So these three relatively low beta, number one, performing consistently. Even the latest quarter, the December quarter, I mean both Titan and Asian Paints numbers surprised on the positive side. ITC was quite okay, I mean nothing really to be worried about, but ITC has got tremendous valuation comfort. I mean this is a steep discount to other FMCG companies. Hotels and paper both on a cyclical uptrend, so there is comfort in these three. So I would stick to some of these consumer names from a
Foodworks and you know the recent.
Well, I really don't know what to make of it. I mean, a company makes an announcement and then within like a couple of hours retreats. So probably it was not well thought out. Either it was not well thought out. I don't know whoever advised them.
Or the bigger shareholders got the better of them.
Sorry?
Or the bigger shareholders got the better of them.
Well, I don't think so. In fact, one thing that I could conclude out of even after the withdrawal of the proposed resolution, it certainly speaks something about the management intent that any management or any promoter, if there is a chance to shortchange the minority investors, they will take that chance. And Jubilant, I thought was not of the same category, but with this episode, they have also just moved that way. That if there's a chance, maybe if not today, 6 months later, if they get something else in terms of an opportunity to shortchange you, they certainly will. Well, the same cannot be said for Asian Paints or Titan or those kind of managements. So Jubilant Foodworks to me, from I would say management intent point of view, have fallen several notches just in the last couple of days, the episode that they went through.
Okay, we'll take a fundamental view on Bajaj Electricals too, but just a technical view. Hadrien, Mendonca 8% higher. If you had the stock with you, would you carry it home?
Yes, definitely I would carry Bajaj Electricals home, mainly for the reason is today we have seen huge volumes and that has actually lifted Bajaj Electricals above the 200 moving average, and if I'm not wrong, even we are closing above those levels. We have not seen this convincing close for Bajaj Electricals since the October of 2018. So that is a major move that has come post his results. I think even on the weekly charts we are seeing a good breakout. I think we need to sustain above 510 on a weekly basis. That is tomorrow's close. Once we see that happening, very convincingly, I think Bajaj Electrical should be the stock in a short-term trading portfolio. With a stop loss of close to 475 on the downside, 565 to 575 is the levels that I'm really watching out for. So Bajaj Electricals really becomes a good buy even at these levels after such a huge move.
Let you go on that note, Hadrien. Thanks so much for joining us, giving us that perspective. Devina, there's something up with Z Group stocks, not just Z Entertainment. Dish TV is now trading up another 2.5%, so about 4.5 to 5 odd percent for Dish TV. Z-Learn is up about 8% in the session today. So there's definitely some movement in all of these companies, not just today, for the last 3 days for Z Entertainment, but the others too are now moving in tandem. The markets usually tell you something. I'm not saying what is it that they're saying. There's a pullback for sure.
Right, and 7 days and counting, these stocks after the kind of cuts they've seen have actually come back pretty smartly. You can't say the same about Dewan Housing Finance. You should pull that stock up as well, because a pretty grey patch for the counter. Management tried to clarify on quite a few counts, but shareholders really not in the mood to let go right now. 2.8% lower for Dewan Housing Finance. It's at 150.
Okay, let's start wrapping up the markets. They will getting final thoughts from Rahul, Randeria as well as Vivek, Mavani post that. But we're ending shutting shop very, very flat. So deceptive moves on the Nifty Bank post the RBI policy. Some upticks, about 0.5%, and then a pullback, then an uptick again, and finally ending very, very flat. The mid caps and the small caps should come up on your screen. They are doing okay. So after a really long time, we're seeing outperformance from the broader end of the spectrum. And while the Nifty is flat, the advanced decline ratio also looks reasonably strong. By the way, the Nifty too is optically flat, because frankly, if you look at the movers and gainers and losers, a fair degree of stocks which have had some decent moves. So Z Entertainment, as I said, up 5%. Sun Pharma 4%. Autos have actually had a good day today. They up sentiment really, autos in these days. The likes of Eicher, Bajaj Auto, Tata Motors, Hero MotoCorp, some very strong moves. What's kept the index pegged back are moves like this. So Reliance Industries about 1.5%, Larsen & Toubro 1.5%, HDFC 1%, State Bank of India about 0.5%. So it's these kind of heavyweight stocks which have corrected, which has made the index look flat. But otherwise, the sentiment a lot better than what we've seen in the last few days. And I would reckon that the same is true for mid caps and small caps too, Devina.
Well, as you highlighted, today's session seems to be a session of outperformance for the broader market space, and individual counters in the market breadth itself looks extremely positive. We're a minute left to go for market closing, but I just want to start highlighting the losers first. And no surprises there. Their top three losers are from the ADAG group. So you've got Reliance Infra, second day on a trot. The stock's down about 30%. So 2 days, 60% down. That's 107 on the counter. Reliance Power follows suit. No respite there whatsoever. 21, almost 22% given up in intraday trade. That's become a sub 10 rupees stock. Raymond is the other counter. We spoke about it at length, and the stock is down about 7.5%. Intraday moves brought it down lower to more than 10%. Recovered a bit. Arcom, another session of a down day for it. Cummins India. Stocks down. Adani Power loses steam in today's session, closer to I think 4%, 4.5% for Adani Power. Equitas, or Jeevan Financial, Future Retail, and PVR are some of the bigger losers in trade today. Amongst the gainers, Muthoot, Manappuram, most of the NBFCs actually, and which have a good enough rating, are the ones that are looking strong. So Muthoot, Manappuram up in the session. L&T Finance also looking strong. Should pull that up to see where it's finally shutting shop. 5.5% for L&T Finance, not bad at all. ICICI Pru, strong moves coming in on the counter. 6-7% higher, was up 9%, has come off from the highs of the day, but looking good. CG Power ahead of numbers, or a dip of 20%, has regained some ground in today's session. 9% higher. Bajaj Electricals and Sterlite Tech is the other one that looks okay for itself right now.
Yeah, some of the stocks which were beaten down because of corporate governance issues have certainly bounced back. Sterlite Tech, ancillary damage, and that is up. The Z Group stocks and some more too. As you said, DHFL hasn't managed to. Okay, final charts as well. Firstly, the turnover would be high, but the cash market turnover would be interesting to see what's happened there. So the F&O turnover would certainly be high because its options expiry will come up on your screen. The
last video check was 1593. It's come to 1795. So that is on expected lines. And even for the cash market turnover, that's an average number of 30,000 odd crores.
Nothing too dramatic. True. The contributors, and let's see, Reliance would be the top drag for sure. The HDFC Bank, L&T. So the heavyweights haven't performed, and that's kind of pulled the index down a little bit.
ITC, that's a top gainer. Sun Pharma moves up. Taro numbers were good enough. Stock took some support there. Maruti Suzuki, 7,200 plus now. And Z, third, fourth day on a trot, that's managed to post a good recovery.
Yeah, so good going really for a lot of these names. Autos were the standout performers today. The market breadth, of course, has looked positive, so no surprises thereof too. Final thoughts from our experts, and Rahul, we'll come to you first. Based on this move, you would argue that it's a day of consolidation for the index, but does the uptrend still stay intact?
As we discussed earlier, that the Nifty has broken out from a diametric pattern and it is sustained about 11,000 mark. It is just near about 11,069. But if you look at last 7 days of rally, the Nifty has already rallied more than maybe 530, 540 points. At current levels, the closing seems to be an inverted hammer, which could see some sort of profit booking in coming days. So for tomorrow specifically, I would go short at the higher levels. I would watch out for the levels at 10,980 to 10,970 on the spot levels, and then would take a call whether to go stop and reverse, means book profits in your shorts and go long. But yes, definitely for tomorrow, I will go for a short at the higher levels in Nifty. In Bank Nifty, again, after a rally of almost more than 1,100 points, again, it is an inverted hammer formation, so we could see some sort of profit booking from current levels. For tomorrow, specifically, Bank Nifty, one can go short. Target would be 27,200, and then at those levels, we'll take a call to go long or what. Overall trend positive, but for tomorrow, I feel that one should go short for intraday basis.
Vivek, what about you? You think that we are in an intermediate uptrend?
Oh, as far as the Nifty or the indices are concerned, I think we are near about at the top of the trading range, which now seems established that you have about 10,100 on the lower side, and maybe over 11,000, 11,100 on the upper side, the 1,000-point band, and we have turned back on a couple of occasions in the last 6 to 8 months. So my sense is, as far as the indices are concerned, there is limited headroom from here, and there could be some profit booking and or even shorting, if I may, or hedging that could happen over the next few days to few weeks. But individual stocks is where the action will continue to remain. Good number of results yet to come out, and some of those could give us cues in terms of what really was stock specific to play around for the next couple of months.
Okay, we leave it at that, gentlemen. Vivek as well as Rahul, appreciate both of you taking out the time and joining in this afternoon. With that, it's a wrap on this edition of Countdown from Neeraj, myself, and the entire team that's put the show together. We're going to be watching out for Tata Motors numbers anytime now.
Thanks so much for watching.